Takaful and conventional insurance differ in values and operation. Takaful, based on Islamic principle, pools fund for shared risk, ensuring Sharia compliance with ethical investment and a community-focused model. Conventional insurance, profit-driven, uses premiums for broader investment, including interest-based asset, to manage risk and generate returns. Great Eastern Takaful offers halal ethical solution, while Great Eastern Life provides flexible non-religious option. Both help manage risk and secure financial futures, catering to diverse. Established in 2010, Great Eastern Takaful Berhad is a leading Malaysian Takaful operator, offering Sharia compliant financial protection and saving solution. Guided by core values of integrity, empathy, teamwork, and action-oriented leadership, the company provides comprehensive family Takaful plans, including life medical, critical illness, education, and investment solution, alongside corporate group Takaful for businesses. Committed to sustainability and ethical practices, Great Eastern Takaful ensures compliance with Islamic principles through its Sharia committee and focuses on halal investment. With digital service like the Get Care app and a mission to deliver exceptional customer experience, it is a trusted name in ethical financial protection. Great Eastern Life Assurance, with over 100 years of history, is one of Asia's most trusted insurance providers, dedicated to helping individuals and families achieve financial security, maintain good health, and build meaningful relationships. Guided by core values of integrity, initiative, and involvement, the company emphasizes fairness, innovation, and community well-being, offering a wide range of personal and corporate insurance solutions. Alongside advisory services, Great Eastern also invests in digital innovation like the Great Eastern app to enhance customer experience. Committed to sustainability and customer protection, the company proactively addresses issues like scam alerts, reinforcing its mission to make life great and its vision of being a leading financial services provider in.
Assalamualaikum and hi everyone. So I am SOFEA, and today I will explain about the operating principles and investment of Great Eastern Takaful and Great Eastern Life. Their differences highlight distinct philosophies and approaches in providing financial protection. So, for the operating principles, Great Eastern Takaful operates based on the principles of Islamic finance, emphasizing mutual cooperation or ta'amun and the concept of risk sharing. Participants contribute to a common pool designed to support one another during financial hardships. This structure is governed by the Sharia compliant wakalah model, which ensures all operations align with Islamic teachings. As a result, Takaful avoid elements such as riba, interest, maisir, gambling, and gharar, excessive uncertainty, maintaining ethical and religious compliance. Conversely, Great Eastern Life, a conventional insurance provider, follows a risk transfer model, where policyholders transfer their risk to the company in exchange for premiums, then the company owns the funds and operates primarily with a profit-driven approach. Unlike Takaful, conventional insurance imposes no restrictions on prohibited elements such as interest or investment in non-compliant industries. A key distinction lies in the ownership of funds. In Takaful, the funds are collectively owned by the participants, fostering a sense of shared responsibility. In contrast, funds in conventional insurance are fully owned by the company. Furthermore, Takaful's operations are designed to strictly adhere to Sharia compliance, while conventional insurance does not impose such ethical or religious guidelines. Next is investments. The difference in investment strategies between the two companies also reflect their core principles. Great Eastern Takaful invests exclusively in halal industries that comply with Islamic laws. Common investment instruments include sukuk or Islamic bonds, Sharia-compliant equities, and real estate. These investments are carefully monitored by a Sharia advisory board, which ensures all activities remain ethical and compliant with Islamic principles. In comparison, Great Eastern Life adopts a broader and more flexible approach, investing in diverse industries without restrictions related to Sharia compliance. Its portfolio includes bonds, mutual funds, stocks, and real estate, including interest-based instruments. While these investments are regulated by financial authorities, there is no religious oversight, allowing the company to explore a wider range of profit-generating opportunities. Next, we move to the key differences in terms of investment instruments. Takaful focuses solely on Sharia-compliant options, ensuring ethical alignment with Islamic teachings, and conventional insurance, however, employs a broader portfolio, including interest-based products. Regarding monitoring, Takaful investments are overseen by a Sharia advisory board, while conventional investment rely on financial authorities for regulation, with no emphasis on religious compliance. In summary, the comparison between Great Eastern Takaful and Great Eastern Life underscores their distinct operational and investment approaches. Takaful prioritizes ethical, cooperative, and Sharia-compliant practices, while conventional insurance emphasizes flexibility, profitability, and broader investment opportunities. And these differences reflect the core philosophies and define each company's operations.
Next, I will continue the presentation by explaining about the prohibited elements in Great Eastern Takaful and also Great Eastern Life operation. Great Eastern Takaful operates under the Islamic Takaful principle, which ensuring Sharia compliance, while Great Eastern Life follows the conventional insurance practice. Okay, the first one is riba, interest. In Great Eastern Takaful, all forms of interest are strictly avoided. The funds are invested in Sharia compliant, which is interest-free assets. Conversely, with Great Eastern Life, permits the interest and may invest in interest-bearing instrument like bonds. Second is Gharar or uncertainty. For Takaful, it eliminates excessive uncertainty by clearly defining terms and mutual risk sharing. In conventional insurance, Gharar exists as premiums are paid without a guaranteed return unless a claim is made. Again, next for Takaful, they prohibits gambling or maisir-like practice by pooling contribution for mutual benefits and reducing speculative risk. While conventional insurance, they can resemble gambling because premiums are forfeit if no claims occur while the insurer profits. Lastly, the non-halal investment. Great Eastern Takaful strictly invests in halal industries, avoiding sectors like alcohol or gambling, while Great Eastern Life has no such restriction and may invest in any profitable industry. Next, I will explain about the profit and surplus management. In Takaful, they use the concept of tabaru, which transforms the contribution into a form of donation rather than being a contractual obligation to receive specific benefits. Claims are made from the tabaru fund, which emphasizing a cooperative and ethical approach. Next is profit sharing. Any surplus after claims and expenses from tabaru fund, it is distributed fairly among participants. For example, a portion may be shared with policyholders as per the Takaful agreement, and another portion is retained for future risk coverage to enhance the fund. In Takaful, they also operate under wakalah model. This Takaful operator acts as an agent managing the participant contribution. This fee is fixed and agreed upon in advance. In contrast, Great Eastern Life adopts profit maximization. Premiums are paid to the insurer and the insurer owns this fund. These funds are invested to generate profits and claims are paid from the insurer's pool of resources. This focuses on maximizing returns for the company and its shareholder with no obligation to share surplus with policyholders. Next is the shareholder-centric model. This surplus generated in conventional insurance primarily benefits the shareholders of the company. Policyholders do not share in the surplus unless specified in certain participating policies. Lastly, conventional insurance treats premium as a transaction while the policyholder buys coverage. If no claims are made, the premium retained by the insurer contributing to its profits. Next, I will pass to the next presenter.
What is legal compliance? It's basically the rules and laws that a company has to follow to operate legally and ethically. In Malaysia, financial companies follow two main laws, the Islamic Financial Service Act or IFSA, which apply to businesses that follow Islamic principles, and the Financial Services Act or FSA, which applies to conventional business. For Great Eastern Takaful Berhad, this company operates under Islamic principle, also known as Sharia. It follows the IFSA, which means it has to do two main things. The first one is follow standard financial rules set by Bank Negara Malaysia, and make sure everything it does from product to investment aligns with Islamic values. For example, Great Eastern Takaful Berhad cannot invest in businesses like gambling or alcohol because these are not allowed in Islam. It also has a Sharia committee to check and approve its operation regularly. On the other hand, for Great Eastern Life Assurance Malaysia Berhad is a conventional insurance company. It follows the FSA, which focus on things like fairness, transparency, and protecting customers' interests. Great Eastern Life doesn't have to follow Islamic rules. It can invest in a wider range of businesses, including those that would not be allowed under Sharia laws. Its focus is on managing risk and providing financial security to its customers. Next, let's take a quick look at the key ethical differences between these two companies. First, their ethical frameworks are different. Great Eastern Takaful follows Sharia principles, which are Islamic rules, while Great Eastern Life is based on conventional financial ethics, meaning it follows general business practice without religious guideline. For this approach, Great Eastern Takaful use a risk-sharing model, where participants help each other by pooling their contribution. Great Eastern Life use a risk transfer model, where the company takes on all the risk in exchange for premium. Lastly, any surplus or profit in Great Eastern Takaful is shared among participants and the operator, promoting fairness. For Great Eastern Life, profit are kept by the company and shared as bonus with policyholders or shareholders.
Next is critical analysis and opinion. Takaful has many advantages over conventional insurance. It follows Islamic principle, avoiding things like interest and gambling. Unlike conventional insurance, Takaful is based on shared responsibility, where members help each other through risk and profit sharings. It also ensures honestly and ethical investments by using voluntary contributions, tabarruk. Takaful is especially good for Muslims as it provides financial protection in a way that aligns with their belief. These features make Takaful a fair and community-focused option compared to conventional insurance. Furthermore, Takaful follows Sharia principle, making it unique and ethical. It avoids riba and maisir, ensure fair practice. It also removes ghar by promoting clear and fair agreement. Takaful is based on mutual help, ta'awun, where members support each other. The fund invest in halal and light areas, following Islamic rules. Finally, Takaful is guided by Sharia governance, ensures transparency, making it truly Islamic solutions. In conclusion, both Takaful and conventional insurance provide financial protection, but they're different in how they work. Takaful is based on Islamic principle, focus on fairness and community support, and ethical practice, which make it a good choice for those who value this principle. To make Takaful even better, companies should focus on creating awareness so more people understand its benefits. They should also offer modern and flexible products to meet different needs. Using technology can make things easier, like faster processes and better transparency. Finally, stronger rules and regulations can help ensure Takaful stay true to its values and rules. Trust. By improving this area, Takaful can grow and become a strong alternative to conventional insurance.